Hello guys, good morning from here. It's almost midnight. It's already midnight. So today it's been long. I uploaded videos, though um, I just started uploading new videos this month, September 2023, and I started with the mentorship. So I feel like posting also on Facebook and probably on YouTube. So I want to talk about crypto markets today, and talking about the popular assets and the first asset that came into existence on the crypto markets, BTC, right here. So excuse me for a sec. All right, so we are looking at Bitcoin right here, and I released a video in mentorship currently today, also talking about a confound breaker structure and other stuff. So I would like to show you guys a brief explanation of that here. So right here I talked about a structural break and confirmation. So is you know that it can be defined as a break of highs and lows to create a new higher high or new higher low, and could be used for the continuation of trend, either a bullish trend or a bearish trend. And one thing I always teach those on the mentorship is that whenever there's a break at from an area of support resistance on the region market, we don't say that is a break of structure or you break a market structure or structural break. We identify that as an area where we're having a stop hunt or liquidity grab or purge. Probably we just say is a stop hunt. All right, price grab liquidity, and due to the fact that those areas where we're having support and resistance are areas that we identify as liquidity pools. So area of resistance, we know that has the buy side liquidity pool, and area of support is now the sell side liquidity pool. So the range market, we also use that in the case of a daily range. So when price takes out liquidity pool from an area of the buy side, the next target it needs to be drawn to would be areas of sell side, and vice versa. So once you have mastered all of this stuff, you can actually know when to buy or when to sell, and areas you should avoid. Also, like if you could actually spot that what price did was a hunt, buying at the area of demand or build a shorter block is to be avoided, or you could possibly wait to see what the reaction would look like. So we have that as a structural break, the breaking market structure, the breaker structure. So I don't know, most people don't like, we don't actually care if people use breaker structure, using those terms, as long as we understand what the person is trying to illustrate to us using their chart. So we use the breaker market structure when price tries to go to the opposite direction, like when if the price has been bearish and it shifted to bullish, the high it breaks becomes a breaker market structure, while the BOS, the breaker structure, is used for the continuation of a trend. So how do you know that price didn't actually do a breaker structure, a breaker market structure? We actually use that in the case to identify liquidity grab, hunt of stops, stop hunt, and liquidity grab. So we have a little schematic right here. In this case, when you see a weak trade above a high, it is not confirming that this is a breaker structure. Alright, price is not breaking that structure. Price just grab liquidity, it grabbed the buy stops on the high, and then continue to go lower. Also, the next is price trade higher, but didn't close far away from the high, and the next candle opened and closed inside the range. So most of the time this is not confirmed as a breaker market structure. And this right here, you see most of the time you see the wicks, just spiking on that high, and also we have this one where the candlestick then still range at that high. So this is identified as a purge. So we'll likely go to our chat right here, and I'll try to quickly explain everything to you guys. So right here we have a structure for us right here. Okay, I think I labeled that somewhere else. So I think that was Euro USD, and let's check on the I think that was where I drew that. Alright, it happens to be, alright, this is it right here. So let's say that we are having a bearish structure, alright, and price happens to shift direction right here after we see a stop hunt right here. Now most traders most traders gets to see this as a break of structure, and they are looking to see at a particular supply, and also on the other hand, price has already traded into a favorable gap and trying to sell from the favorable gap but didn't break the structure, so a demand was formed right here, and then we have the structural break. Now the first break that occurred is what we identify as the change of character before this other break or structure. Now we use two structural breaks to confirm a shift of trend. Alright, so a strong reversal, alright, we use that to confirm a strong reversal. One structural break cannot be used to confirm a strong reversal. So this is a change of character, and this is a break of market structure. So we use the break of market structure to identify the price is trying to shift direction to the other side. So now when price breaks structure and it traded backwards to the demand responsible to change character, and so when you trade higher to break this high, we call this a break of structure, and also it will have to go and break the other high right here, and this is known as a break of market structure. So break of structure in continuation of trend, and break of market structure in to say that it breaks a previous high and low from the other trend of the market. So so that is it when we get to talk about a break market structure, and structural break. So confirming all of this stuff, I explained it right here from the session I did previously. And remember, I said that we don't use that on a range market right here. So we have a range market, and you see this break that occur right here. This right here is price grabbing liquidity, taking out sales liquidity pool. So it next drawn to liquidity will be buy side liquidity pool, where we have an area of stops resting on these highs. So that was what you actually see what happened right here, because I know that most of us will be waiting to execute sales at this area of order block when you already have liquidity, pool of liquidity above you. So price will likely be drawn to areas where we have liquidity. Now this right here, we don't mark structures right here because this is a choppy market, the clean area, so I don't pay attention in marking structures at that area. So same thing right here, price took out sales liquidity pool and be drawn to the buy side liquidity pool. So in this case right here, when price created a failed high, you can actually see that this right here is a hunt, but if you want the 4-hour time frame, you'll be thinking you saw a demand right here, so price violates the area of demand. And also I forgot to mention something to you guys, which is right here, that you are to identify them from a higher time frame, the monthly, weekly, daily, and also pay attention to your aggressive daily range, so you could actually know if the price is out of the daily range or if it's actually at the structure. So going back to your chart, there is also a type of structure that we call a one-sided market. So the one-sided market always trades backwards to a favorable gap so that it can quickly be drawn to liquidity in which it wants to be drawn to. So that's what we actually experience right here on Euro USD. Reverse backwards to favorable gap, favorable gap, favorable gap, and it's been balanced the price. So I will be releasing a new video talking about the theory of imbalances and favorable gaps, so you can use that to execute trades and predict the price. So right here we are talking about Euro USD, and you actually see what happened right here, right? So if you look right here, we actually see that price actually did a hunt right here. Like this is a liquidity purge, it grabbed liquidity and traded lower, right, and respected an area of demand right here. So after that we see it traded higher, but nevertheless what actually occurred right here was what I predicted, that we are going to be buying euro on the month of February and the month of June. to this high due to the fact that we have in the algorithm D range. If you go to your monthly time frame, you actually see that market was ranging right here. So this is the algorithm D range. Price took out previous month low, trade higher, be drawn to liquidity. This one lower, the previous month opened, refused to go higher. Now, sorry, it went higher to grab liquidity. Now, if you identify this right here on your monthly time frame, you will get to see that this did not do a breaker structure. What it actually did here was a grab liquidity. And what did you grab liquidity from? From areas where we have in double top. So one thing I want you guys to go and study in your chart is areas that are having double tops, triple tops, area of support resistance. You get to notice that right there is where you're supposed to be putting your take profits, right? If you're executing trades, and also price tends to just haunt that area and reverse to the opposite side of the market. All right. So if you go to your chart and study that, you actually see that it's true. You actually see it happening all the time. Price will haunt areas we have in double top and then reverse to the other side of the market. So right here you can actually see that price spiked through it, and also using the algorithm range, this is a previous 3 months high. All right, 1 2 3. So it took out the highest high in previous 3 months, and using draw the liquidity be 3 months low, and also we have 6 months, and we still have this imbalance right here on Euro USD. So on the weekly time frame, you actually see right here this candle and then this candle closing right here. We didn't close far away from that. All right, so this right here is not a confirmed breaker structure. And the other hand, due to the fact on the week monthly time frame, we have already seen that it did a stop hunt and not actually a breaker structure. So price put backwards to be drawn to liquidity right here, and imbalance that we have right here. So remember, I'm still going to talk about BTC. So also we have synthetic indices. If you go to VIX 100 1S right here, actually I took a trade on this, but they are left when price got to this level. So this is why I had my trade. Now how what made me execute trades right here? The reason is because I was on my higher time frame. So if we go to the monthly time frame right here, you actually see what I call right here, right? Price just did a pullback, and when it did a pullback, it traded into a fair value gap right here. All right, so I was also on the weekly time frame, and if you pay attention to what happened right here on the weekly time frame, you will see that what the price did was a stop hunt. But if you go down to your lower time frame, you would think that what it actually did right there was a break of structure. Why it is a hunt on buy stops. So going down to the daily time frame right here, this was the reason why I took a sell right here inside a fair value gap. So you actually see right here what happened right here when the price trade higher. It didn't go far away. It didn't trade to break the structure far away, right? And it quickly closed down below right here. So we have buy side imbalance right here, and price trade into that and reverse backwards to the fair value gap. This is where I was paying attention all this while to execute the sell, because I've noticed that price while selling is been balancing itself right there. So while selling to balance the buy side, it is also balancing sell side. All right, so that is one thing you should know about algorithm. All right, because this chart is a program. It's an algorithm. All right, so while selling down to balance the buy side, it is also balancing the sell side, but left this one unbalanced. So once it is done balancing right here, you trade backwards back to the fair value gap. Those will execute the sales, and then targeting liquidity, because you can already see that while trading higher is being traded on the trade line. So looking for buy entry is not valid, because this also lacked liquidity. So that is an example of confirming a structural break that is valid and one that is not valid. So you avoided buying right here. So also we have VIX 100 right here. They will had two limits, or had a limit here, but it did trigger. So I was trading a fair value gap right here also. And we also have step index. Now, when you look at step index, if you go to your 4-hour time frame, what I was talking about, you actually see that we have previous week basket liquidity pool, and you get to see the price hunted the high, right? And when it hunted the high, I actually took a sell from the start, from a 5-minute order block right here. So after taking the sales right there, all this while I've been trading, I was taking partials also, and they are all down in a fair value gap. So I had this fair value gap right here, traded into it. I also have this fair value gap right here. I took the sales there, then closed, and now I'm taking another sell from a fair value gap right here. So what will be my take profit? Previous week low, areas where we have liquidity. So you can actually see this is a one-sided market, and I'm taking sales right here. So back to crypto. All right, so I was actually going to tell you guys about BTC. Try to share my thoughts right here. So I was looking at BTC right here, and understanding the theory of fair value gaps, imbalances, supply and demand. Those that went to school and study finance, economics, commerce, and yeah, that's it. So I was on a 6-month time frame, and using that theory of imbalances, fair value gaps, and stuff like that. Right here we have BTC USD, and we already know what occurred right here was a hunt, right? So that right here is liquidity grab, so it is not a breaker structure, right? So I know most people saw this as an area of demand and identifying this as a breaker structure. So you actually see why I said that when you can easily identify areas where you're having stops, you should avoid areas of demand, because it could possibly not hold the price for long. So this stop for some Y and gets violated. So back to the 6-month time frame. Understanding the theory of imbalances and supply and demand. So let's just quickly do our research on supply and demand. So supply, I just want to show you guys something, right? So I offer financial services, and while doing that, I need to teach everything from scratch. Alright, so the law of supply and demand in economics, how it works, blah blah blah. The law of supply and demand combines two fundamental economic principles. So let's click on this. Let's click on this. So the law supply and demands commodity or product affects its supply and demand. As price increases, right? So as price increases, supply rises while demand declines, right? So what that means is that the more the price of a product is increasing, all right, so as supply increases, as the price increases, the supply rises, all right, while demand declines. So the reason why demand needs to decline is because the price is getting expensive. All right, so nobody will have that much interest to purchase certain price level. So the supply rises. So that means the distribution of price needs to occur. Now let me explain that to you guys right here on the chat. So we have let's say we have a bearish structure, right? So now demand gets to increase, right? So as price is increasing right here, the demand is declining, so people are losing interest. So that means that will lead to the increase of what? Supply. Because when price gets too expensive, then that means the producers need to supply the price. Alright, they need to supply the goods, and while supplying, that will lead to the decline of price. So That is what it means by when the price rises, supply increases, and then demand declines due to the fact that we're having expensive, the price is getting expensive. Conversely, as the supply drops, right, as the price drops, supply constricts while demand grows. Now, what this means is that when price gets to a certain area where it gets cheaper, right, that would be when supply is out of control, and then demand increases because price dropped, right? So let's take that for example right here. So that is, by the way, we are still on trying to understand supply and demand and use that in trading to understand imbalances. And so levels of supply and demand for varying prices can be plotted on the graph as blah blah blah. So we already understand the main reasons of supply and demand. So I want to look at this here. So the law of demand holds that the demand level for a product or a resource will decline as its price rises, and rise as the price drops. So we already explained this. So conversely, the law of supply says higher prices boost supply. Alright, higher prices boost supply of an economic good, while lower ones tends to diminish it. A market clearing price balances supply and demand, and can be graphically represented as the intersection of supply and demand. So that means the price, there's always have to be a balance between supply and demand. So there is like a universal law of balancing two things, two matter, like two things that has been in existence. All right, so it's like whenever something is in existence, there have to be an opposite of that, and that right there could create a balance for the universe, just like the yin yang. All right, so if there's a boy, there's a girl. If there's black, there's white. So if there is matter, there's antimatter. So they should try to be at least equilibrium, so that, you know, but still yet there's some cases where the other one has to surpass the other one, and you have to find a way to make them stabilize and equal. So that is what we are trying to fight in our economy today. So all right, so let's go to our chart and we talk about supply and demand. So right here we have this high, which represent buy stop, right? So that means there is a stop right resting right here, and it's called buy stop because when price gets there, it means that you're buying it. All right, most traders are buying it. So retail traders are waiting for a breakout. All right, so we have this buy stop right here, and then we have the price range for a Y right here, and suddenly this last candle now is what is responsible to increase demand, right? So when the purchase of this asset started, there is now an increase in demand. People are now purchasing this asset in the year 2020, and remember the law says that when price increases, demand diminish and supply takes control. So now it has gotten to an expensive price level in which you and I know that you will refuse to buy something that is expensive, right? Will you have the guts to, though, you know, I'm not a millionaire or billionaire or stuff like that, but I know that majority of us, those that are into business, investment and stuff like that, will not be willing to buy something that is too expensive. One Bitcoin worth $69,000. So imagine me bringing out this $9,000 I could possibly use to start up my business and a company just to purchase this. So, but if it is at this price level, $4,000 to $2,000, most people is actually cheap for them. Yeah. So this right here started the impulse rally upwards and gave us an all-time high. Now, when that happened, you actually see that there's a buy side right here. So this is known as the buy side imbalance, sell side inefficiency, and what that means is that it was only a buying pressure that occurred right here, and there was no selling pressure, right? There was no selling right here to balance the buy. All right, so what the algorithm has to do in possible future is that it has to come back to try and balance sells with the buys, and that is actually what it tried to do right here. So most of the times when price always gets to fair value gap, is either it closed it completely or it goes to the 50%. So we are going to be marking the fair value gap right here. So most of the times when I'm marking my demand, I like marking the black candle, the last sell candle. So we have to mark fair value gap. You can choose this one, choose this one, or this one, but I would like to choose this one. So we use our Fibonacci right here to this place. Even if you go to this place right here, and then we get to identify our 50% of that right here. So price went to 50% of the fair value gap, but still yet we are still expecting it to come to the origin of that demand where people started buying it, and that is this demand that was responsible for that. And that right there is at a $10,619, $695, right? Now price trading to the fair value gap balance state, right? So you should take note of this sell candle right here. This sell candle was creating also sell side imbalance. So we mark our fair value gap right here. And so this right here is a 3 months, and while it was selling, also trying to balance this side, it also created its own imbalance on the opposite side, and that is a sell side imbalance. So we will change the color of that to red, so we can use that to identify sell side imbalance. So it seems like the colors are looking red. Alright, so we have the sell side imbalance on the 3 month time frame, and if we are to mark fair value gap, we put our Fibonacci right there, and the 50% Fibonacci is resting right here. So that is our Fibonacci 50% right there. Alright, so now price traded 50% of the buy side imbalance, and also it left a sell side imbalance. So it needs to buy back into the imbalance so that it can try to balance the sell side. And that's what it did right here. Trade into the 50%, kind of trade above it, and we say that would be like 60.1, 0.618, and now we actually see it's rejecting the sell. So the idea is that this right here created a swing low right here. Alright, and after a swing low we have a swing high right here, which balanced 50% of the sell side imbalance. So its next idea is to watch Bitcoin trade down here. Now when you get here, we get to know if it wants to go higher, alright, or if it decide to go lower. So we are waiting to see if it gets to that demand, and when there's a confirmation, probably on the daily time frame, we will know if we purchase it or not. So balancing right here, and that happened in 3 months. Now using the algorithm range, also we can actually say that what price did was it did a hunt on previous 3 months high, and when that hunt occurred, that was down when we see the reversal downwards. So what is draw to liquidity, that would be a sell stops resting at previous 3 months low, and that is it right here, So when price gets there, trade into the imbalance, then we will know its fate. Either it will wants to shift from this fair value gap right here after taking previous 3 months low, or we still go lower to the origin of where we have the area of demand. And after seeing all of that, we can actually see right here, talking about structural break and confirmation, you can actually see that it was a purge on the monthly time frame, and going down to the weekly time frame, because I was thinking that Bitcoin needs to continue going higher to probably this area right here or this area right here 12 months, but it didn't because of what it did to us right here was not a breaker structure, it's a liquidity purge. So price took out liquidity, starts purging that area, continuing to hunt the high, taking out stops, because it's kind of like believing that there's still someone who wanted to buy there, so it would try to fake out that area, hunting stops, and finally decide to trade back lower. And when it trades back lower, so I'm marking the structure now, major highs and lows. That is a high, this is a low, this is a high. So after a hunt, probably some traders will say this is a breaker structure and they wait to buy at this demand. So what did the price do? Didn't actually respect that area of demand and eventually trade backwards to a fair value gap. Right, so it's balanced. It trade backward. It quickly trade backwards to balance sell side, and now it's kind of ranging and going bearish. So that is the idea of what I can actually see on Bitcoin. I like to see it because I know this is a sell stop. Whenever I'm seeing a week like this hanging man stuff, I know that's liquidity, that is a sell stop price. We go for that low to take it out. And now we're also looking at this low also. So the idea right here is trade lower. All right, this some balancing, we will have to do some balancing right here, I think so, and then go for this sell stop right here, and you know, likely get to see it go back lower to $15,000. So that is my outlook of BTC, and I previously did something with my on the mentorship group, and that was Solana, and the analysis we did was a sell. One of the members shared his idea and we looked into it. So it's just the same thing I always talked about. This right here is on the breaker structure, and well, I see this as a hunt. Price hunted it and starts to push. You see the consolidation right there, right? So it starts to push. So the analysis was done right here, and we analyzed the price. We have to reject from a fair value gap right here, and the fair value gap has this other block, this buy candle right here. So we actually see the reaction, the quick reaction right there. After balancing sell side, it trades downwards, and you already know we have liquidity right here equals, so we have to see it drawn to that area, and then we have sell stop right here. So I actually see that price first of all took sell side. This is a hunt, not a breaker structure, because I know that, because if you pay attention, this is a range market, right? So the range market is right here. We have area of support, resistance. We have area of support. This is a ranging low. So right here, this is not a breaker structure because this is our major low. Price hunted it. Price purged that area. You can see the consolidation right there. And most traders will be wanting to sell at this area of supply, and they get violated for all reasons, because price didn't break a major low. Go to weekly time frame. Price didn't break structure. It hunted that low. It grabbed liquidity. So be drawn to the next liquidity, and the next liquidity was drawn to, it did a hunt right there. So we are seeing it trading down, and then we're targeting this low and this low right there on Solana. So I just want to share my thoughts and to tell you guys that I am still available, just too busy, and yeah, we give you guys content that you could actually learn from, and you know, help yourself in your trading career also, and share your ideas, share your thoughts, stuff like that. So mentorship access is still available, because you know my mentorship is done on Telegram. I upload my contents on Telegram, and we have a conversation on WhatsApp. So that is a personal. WhatsApp is a personal stuff. So